we've got the rand seeing that strength being maintained. 676 is where we're at right now, and of course a lot of positive sentiment having filtered through from the Greek austerity plans that were passed yesterday.
Yes, good morning, Alishia. Well, as we've been saying for a number of weeks now, this rand has really been tracking those euro-dollar movements very, very closely. And that kind of relief really that we saw in the euro post the austerity vote has given the rand a bit of a lift, as has growing expectations that the ECB will probably look to hike rates once again later this month. So we see in the euro on a firmer footing, we see in the dollar losing some of its safe haven appeal, as is things like the gold price, and that is actually helping the rand.
Of course,
and other risky assets.
We've also seen data filter through, and while the US's data yesterday was slightly encouraging, we had PMI data out of China this morning slightly disappointing. So how are you reading that economic scenario? Because it's a world at loggerheads at this stage with the kind of mixed data we're seeing emerge.
Yeah, I think that's the risk for currencies like the rand and equity markets and risky asset classes in general, is that we're still not convinced that this global recovery is firmly on track. And I think, this morning's PMI figures out of China just talks to that, as does figures out of the States when we look at the employment figures of previous weeks and a lot of other data. So there's a lot of concerns out there as to how sustainable this global recovery is and how strong it is. And of course, if it does start to dissipate and we do experience a protracted soft patch in the global economy, then risky assets and commodity prices more generally could suffer as a result. So that's something we've got to keep a very close eye on.
That pertaining to the global recovery, what about our local recovery? We've seen economic data filtered through, and again, a mixed bag, but what it has done, it seems, is push out interest rate and tightening measures a little further on home ground.
Yeah, I think if we look at yesterday's figures, we saw producer price inflation coming out not as high as market consensus, but still up on the previous month's reading. And what's worrying for me there is that we're seeing food inflation at the producer level now also starting to ramp up, particularly at the agricultural level. And that probably bodes ill for consumer price inflation when we look at food going forward. Another sort of concern is what's happening to, of course, electricity prices and administrative prices more generally. And I think this is now going to be a big, it's going to be a difficult challenge for the Reserve Bank to deal with. On the one hand, we've got kind of jobless growth coming through, but at the same time, inflationary pressures are mounting, and we've got this sluggish global recovery. So, we've got some tough times ahead, and I think policymakers have got some interesting policy decisions ahead of them. And obviously, the rand is going to have to pay close attention to that as well.
Amidst that sluggish global recovery, we saw South Africa's trade deficit narrowing and pretty much in line with expectations to 1 billion rand. The reduction underpinned by higher commodity exports, specifically precious and base metals, Michael.
Yeah, well, that's all very well for the time being, but as you mentioned a bit earlier, we've seen the manufacturing sector in China slowing down. So we need to see those Asian economies continue to churn out high levels of growth and continue demanding those base metals. So far, that has been the story indeed. But the question is, will that be continued in the coming quarters? And it might very well not be the case if this global recovery is sluggish, particularly in centres like Europe and the States, because ultimately we know that the Chinese exporters are sending these goods onto those Western regions. And if that growth in those Western regions are slow, then in turn we could see a bit of a pullback from the Chinese and then ultimately a pullback for our exports. So again, it's something that we really are watching closely.
Looking forward to data expected on the local front today, we are anticipating PMI numbers as well. What are you pricing in there?
Yeah, there is another case of a slowdown. With the manufacturing sector did very nicely in the first quarter of this year, but I think that we are concerned that the manufacturing sector will struggle in the second quarter. And you know, we're probably going to see more of the same from the PMI today. We're going to see that index level trickling a little bit lower, and I think that, you know, it just speaks to, again, this sluggish global demand. Domestic demand is picking up, but it's not robust. And of course, manufacturers also have to contend with a strong rand. So there's a number of challenges facing the manufacturing sector, and we just think we'll see a bit of a cooling compared to what we saw in the first quarter.